You see it in the receivables that you're holding on to. You can see it when the cash comes in. You're doing more jobs than you have in the past, and the growth is definitely happening. The next question to ask and to think about is, out of all that revenue that you're generating, how much of it are you keeping in the form of profit? So we start with top line revenue, and then we subtract the costs to do the work. Labor, so wages and payroll, insurance, job-specific materials. Then you've got the general things that you need for your business, like insurance, utilities, vehicle payments, all the fun stuff that you need to make your company go. The question is, for every dollar of revenue you make, how much of that is left over in the form of profit? Because you can use that profit to grow your company, reinvest it back into the organization, or that's your reward for the hard work that you've done. So the question is, how do you know how much of that there is? And do you know that question, the answer to that question, by a project? Or is every project profitable? Are you maybe taking on some projects because they get you into other opportunities that will be more profitable? Those are business cases and decisions that you get to make as an owner. But ultimately, if you don't have the information to make those decisions and you're just using your gut, what happens when your gut isn't quite right? What happens when some of those projects are just a little behind on the profit that you think you need? Good bookkeeping practices will help you know how much you have left over at the end of every job. We can organize the expenses that you have by project and keep track of them so that we know which projects are winners, which ones are losers. We can categorize the winners and find the common themes between them. You might be using a spreadsheet to keep track of your projects and how profitable they are. I love spreadsheets, there's nothing wrong with them. The only thing I would ask is, how diligent are you about keeping track of those costs? What does your system look like for finding errors and omissions in those spreadsheets? And ultimately, at the end of the day, is there a way to validate what your spreadsheet says versus what your accounting system says? Let's stitch those two things together. And if that means we just improve your spreadsheet, or we actually move to a project management software of some sort, maybe that's the outcome that needs to happen. Either way, let's help you find out how profitable you are on every job.